We have another delightful Jerome Powell presser to break down today. We saw inflation come in under expectation this morning. We'll be discussing that and much more today on Money Never Sleeps. Thanks for joining us today, everybody. As we get going, do us a favor, hit that like button, subscribe to the channel. Remember, nothing we say is financial advice, so do your own research for making any trades. Kevin, we had the J Pow presser today. I was worried that I was going to be late for it because I had to put my son down for his nap. And I was like, okay, I can't play, I can't be listening to it while I'm putting him down in his room. So keep him awake. And then I remembered, wait a second, these things are boring as fuck. That motherfucker Jerome would put him to sleep immediately. another just watching paint dry kind of presser today after the Fed announced that there will be no rate hike, no rate cut either for the 7th straight meeting. They are holding rates again, as we expected. They are expecting less cuts this year. The market does not love that. It has been up and down today because we saw a big spike up after the inflation report. And then just as I predicted on Twitter, J Pow took a piss on our parade. How are you doing today, buddy? How are you feeling after that riveting Jerome Powell press conference?
I think you should change the name to Jerome Powell because that motherfucker just says the same thing at the same monotone level. He was talking in circles today. This is one of the probably my least favorite meetings and pressers that I've had. Not that any of them were like my favorite. This one this one really sucked though. Like I was just bored out of my fucking mind. The good thing was we were starting to get some reporters who were asking some questions about like, so what are you guys doing then? Like, you guys got any type of idea of where you're heading? And he's like, me no say. And pretty much what we're stuck with. It's I have way more questions than answers, but the one thing I can say that I got out of it was if they decide to do a surprise rate cut or if they get any rate cuts in the near future, watch out because they're steadfast on getting that inflation number down. But if they start cutting and everything still looks pretty shitty and murky, well, then something probably big is broken in the system. That is the only thing I got out of today. Everything else was pretty much we're data dependent. We're data dependent. The data sucks.
Yeah, we let's go through a few of the numbers. We saw the year-over-year CPI headline number at 3.3%. That came in just under the expectation of 3.4. We had the core number coming in at 3.4, just under the expectation of 3.5. So it is moving in the right direction, albeit slowly and still considerably higher than where the Fed wants it to be. We'll have to see here later this month what the PCE looks like. If we see another, let's say the PCE comes in under expectation too at the end of this month, maybe we'll start to see, a bigger bounce and maybe a possibility of a second rate cut. Who the hell knows? But it's, it's allegedly things are moving in the right direction. How much of this will be revised? It seems like that's always taking place. We're always revising things back up or back down, depending on, if the numbers come in good. But anything jump out at you on today's inflation print?
No, not necessarily. I mean, again, I thought it was going to be a beat or at expectations, just because it seemed like that's the way the market was kind of going, right? And I don't have anything to justify it itself, but I know that someone in the presser today asked a question about consumers. It seems like the inflationary pressures on consumers' goods has dropped significantly, right? We talked about that a while ago. For the supply of goods has to find demand at the right price, and we're starting to see that across pretty much all sectors of everything from clothing to food. I mean, for the most part, we're seeing it come down to a point where it wasn't nearly as bad as it was in, say, 2022 when prices were going up like crazy. But the thing that really, just to go back to that presser, which really bothers me, is that time is not on their side, right? That's the thing that's really scary right now because rates are still elevated here. The longer that they stay elevated, the less that these banks can create debt, which actually fuels the economy. We're a debt-based economy. We need to get money in the system in order for us to continue to see things move in the right direction. I don't know. It doesn't seem right. And especially with inflation coming down, I understand that it is coming down and they're probably going to see a recession. I think that's not out of the question at all. Depression or something like that, maybe you could argue about, if you believe that we're going to see the worst thing since 1929. But I think a recession is pretty much standard at this point, given how little consumers have money and how little debt is being created right now and how long we're seeing the yield curve be inverted for. So when I get inflation reports and they're like coming down and cooler, and they're not getting a rate cut, it's like, well, inflation can still come down if there's a rate cut if we're in a recession, right? That's the only thing that people don't understand. They think that the rate cuts themselves are going to be the reason why inflation comes down. Not necessarily. I mean, the rate hikes, my bad, not the rate cuts.
Yeah, we had, the reporters are like asked the same question. Like it's just the same questions over and over. But we had one of the reporters ask, what can you say to the American families and American people who are having to pay this higher cost of borrowing? They need some certainty. Can you tell them when rates will be coming down? And it was just the same old. And it is having an impact, right? Like a lot of people, we've talked about the housing market. I'm seeing the prices starting to come down because people are in trouble. They're underwater on their houses. They're underwater on their investment properties. They need to get that money, and no one is buying because of these rates. And if we see one cut this year, and if the rates come down, I think for most people the magic number is like 5%. They'll start looking again, right? Like that to me. And maybe we'll see that next year. Maybe we'll see that the year after that. But I think there are plenty of people in the same situation that I'm in where, like, through COVID and all these last few years with rates higher, their families have grown, but they aren't moving into bigger houses. And will we see that change? Will the housing market take a big plunge? Or when rates come down and we see the buyers come back, is that just going to keep jacking the prices up higher? So it's a really weird time in that market. Meanwhile, you got, the CRE bubble ready to burst any day now. And
literally any day.
Like we see those tweets, those posts on X every day where it's like, this building was sold at a 90% loss. And like someone is eating a lot of shit on that. And it is not a tasty meal.
That's the problem. It's the banks. The banks are the ones who end up with the losses on that. And it's like, how are they staying afloat with these rates and no rate cuts in sight? That's why I'm so open to the idea of something happening where the rate cuts have to come down. It's not sustainable one bit. I know pandemic definitely changed a lot of things in terms of, the monetary system, a lot more money circulating, but the CLOs are starting to go fucking tits up on a lot of these banks. We know a lot of them are holding these in the wrong direction. And the problem also too is that the stock market's concentrated in 3 stocks, right? The S&P, the reason why you see the S&P and the NASDAQ go up and not the Dow or, the Russell, small caps, you might get 1 or 2 here that are just like short squeezes, is because it's 3 companies. It's 3 companies, the 3 largest companies in the world, or at least in the United States, I should say, because I forgot about Saudi or Aramco. But Apple, NVIDIA, and Microsoft. And NVIDIA is probably going to pass Microsoft, I think, for number 1 in the world. And the question is, why are these all the all-time high? And is there anything that could bring these down? Well, yeah, if all 3 of them go down at the same time, that takes down the entire S&P. I mean, at least 15 to 20%. That's what is going to happen if we continue to put all our concentration in these 3 stocks. But it doesn't mean that all the things in the banking system and all these other things that are going on with consumers aren't real problems. I just didn't. He's so out of touch, and I think that they're really out of touch, or they just are hoping for the best at this point, because none of this makes sense, and there has to be some type of pressure relief in the market itself. Otherwise, it's going to be fire sale after fire sale. And this literally could end up a lost decade or one of the worst crashes in history when it finally does crash. Right? It's one or the other. I mean, me asking for a recession right here is probably the least they could do. I'm not saying it's good for America or anything like that, but it just seems like the most logical thing to bring inflation down and to finally get these rates under control to maybe like 2%. 2%, that's a good rate. I think that's fair to keep us at a non-inflationary period for, a couple decades or so. But these prints, man, these prints are so bad.
As you're talking about, the bringing down the S&P, let's pull up the chart for Apple, because Apple has gone absolutely nuts the last few days. trading just under 220 a share. I think it briefly touched 220 and then came back down. But absolute great week for Apple the past 2 days. It is bringing everything up with it. Apple's up 5.5% today. NVIDIA 3.5%. Tesla just under 5%. You see Coinbase having a really strong day at 6%. Up almost 15 a share. It is these are bringing everything else up with it. Question is, are there buyers out there to keep pushing the price higher? Or are we getting, we talked on Monday about all of the short interest out there on tech. Could we see this continue to run even higher if those shorts get liquidated? I mentioned 34 billion of shorts on NVIDIA. Well, if NVIDIA keeps pushing up like this, that liquidation could cause a short squeeze, and this thing could go absolutely crazy.
Oh, 100%. This is why I said that these are the most dangerous stocks right now. And it doesn't make sense to be shorting these logically. Against non-financial advice, whatever. Take that as a B. But just look at this chart from where we were in 2020 to where we are now. Apple was trading at $54 a share. Right now, currently 218. You have to question, it's like, all right, who are they going to distribute this to at some point, right? Are they trying to really get people excited into the market that they're going to buy at these absurd price levels? I don't know. Could it be the point that they're just going to keep buying? I know Apple's is a little bit different. That was a huge stock buyback that Apple initiated. So that makes logical sense why the price shot up. But that's a huge amount that they must have bought in order for that price to just rally up. Obviously, it was in a bit of a funny pattern up here. This is on the weekly. You can see it on the weekly as well. But, you got a double top here. Usually double tops break to the downside. It looks like we're getting a bit of a short squeeze, and it looks like we're getting a bit of a blow off top here in Apple. So that's my best guess as to what's going on. I could be dead wrong. We're also getting to the point where the summer months of volume should be dropping significantly. You can see on the weekly, you're not necessarily getting that bearish divergence. You could argue it. I don't think so. I think on the stochastic RSI, you can see that it's getting very overbought very quickly. Let's take a look at the monthly on Apple.
Sure. With everything going on, I think it's safe to assume that summer is going to be plenty active in both the stock and crypto markets. It's an election year.
Agree.
Everything going, this is not the sell in May, go away year. This is you got an election this year. We have, the crypto ETFs. We have interest rate decisions that are going to impact the markets heavily. So it is going to be an active summer out there for people who are deeply involved in the markets.
Absolutely. And let's also not, forget about all the things that are going on in the world right now, right? We have 3 conflicts that could potentially arise and get worse. Seems like there's definitely military actions being taken a lot in the EU. A lot of those countries are ramping up their military divisions.
You saw the reminder that was sent out to people in Florida not shoot at the Russian subs that are off the coast there. There's like a Russian
what?
Yeah, there's a Russian sub.
Another subs,
off the coast of Florida, and they're just like, "Hey, don't shoot at it, okay?" You got to remind the Floridian. I don't know if that was a joke or not. I saw it from what I think was something real, but you got to remind the Floridians, don't shoot at the nuclear sub, okay? It's not going to do anything.
Someone please tell Rockstar Games before the release, just make sure you have like a submarine out off the coast of Vice City, just to fit with the times, right? They did a really great job with making it, tie in with how Florida really is. They might as well just put those subs out there 90 miles south in the game. But jokes aside from that, this is definitely a time where there's a lot of things going on. I know we haven't talked about this at all, but there's 2 snap elections that are, or maybe we did. I think we talked about before the show. 2 snap elections
on Monday.
Yeah, and a lot of things are going on in France too. A lot of people are not necessarily happy, and we know that there's also the Olympics this summer, right? And it's just really interesting because everyone, in terms of the monetary system, because I do think this is going to be globally synchronized, is going to be affected by what's coming. So this is definitely going to be a year in the summer. Like, I think that there's going to be a lot more volatility. I think that we could run up a little bit here into the summer, but I do think that there could cause something that brings everyone back into the market, whether that's to the upside or to the downside. And I think that we're very close. I'm just going to share my screen with the VIX. I think the VIX is actually really close to breaking out. And I think it's going to break out maybe in the beginning of some point in July. And then we could see it, rally a little bit higher. And maybe that's just 20 or so, but I'm going to pull up this on the charts and show you what I'm seeing. Let's go to the VIX. Where are you? I got too many fucking things going on here. Yep. Oh, there it is, man. It's literally doing what I was afraid that it would do. We're seeing it getting crushed, right? I said that we'd see maybe a crush down to like close to 10 or so. My question is though, are we in a bit of a diamond pattern here, right? So diamond pattern is the either you see it at the top of a market or you see it at the bottom of a market. And it pretty much indicates that we're going to be going one way or the other. But this is the pattern that I'm kind of seeing. And it's really hard to see unless you are looking for it. I didn't even notice it. Someone else on Twitter actually pointed it out. And I was like, oh shit, if it comes down to this level around 1176 and it holds, and then it starts to rally a little bit in here, there is a good chance that we could be in this diamond pattern that caused for a little bit of a breakout in the VIX. What could that be? Who knows, right? But we do know that we're getting close to the end of a 4-year cycle in the VIX, and also within that diamond pattern, we're also in a major bull flag, lower lows and lower highs. Is breaking out above 20.65. Maybe that's just where we break out to, and we test it, and then we go back down later at some point in the next few months. Test it again, maybe it breaks through. But you're in a bull flag, a diamond pattern in a bull flag within a 4-year cycle where it literally began in March of 2020, and you have not broken from this. You had a little bit of a break here, but it went right back underneath. This is a major volatility trigger that could happen at any point. It's been suppressed for far too long, and the markets are at all-time highs. It's very dangerous here when you're looking at volatility. People have been short volatility for a long time. One thing, and everyone's going to blame that one thing, but honestly, it's a mixture of everything that we've seen in the market, right? It's the CLOs, it's commercial real estate, it's the banking crisis, it's unemployment, it's foreign policy. There's a lot of things that just kind of get to the point where it's like, all right, we've kind of shrugged this off for a long period of time. Now we can't really do too much about it, and now the trade's unwinding, so we kind of have to follow in suit. And that's why I wanted to bring up Apple, Microsoft, and NVIDIA, because anything happens in the S&P, that's what causes the VIX to go up. So NVIDIA, loses support, and it just goes straight down to that 383 level, maybe in the course of 4 months or something like that. There's a good chance you could see the VIX just absolutely skyrocket to, maybe 40 or 50 or so. But that event I do think is on the way. But, the rates staying restrictive like this makes it even worse for when it does unwind.
All right, let's take a look at crypto. We've seen a lot of volatility the last few days. Big drawdown yesterday in crypto. We saw some of the majors take monster hits. Bitcoin went under 66K for a second there. Recovering some of those losses. When the CPI print came out this morning, it was, completely got back everything that it lost yesterday. Now it's been cut in half since Jerome Powell opened his fucking mouth. But we still see Bitcoin doing okay on the day. ETH as well. Some of the alts having, a little bit of recovery from the lows yesterday. Where do you think we're headed? Let's say over a time frame of the rest of this month. Okay. So about, 3 more weeks. We have PCE data at the very end of the month. Really nothing else. We got PPI tomorrow, but no big, as far as I can see, no big data releases next week. We have some of the regular stuff. We'll see retail sales, things like that, but nothing on the inflation or jobs front, really. So where do you see things heading over the course of the remainder of the month?
I think it's going to go very close to all-time highs. I
Really?
genuinely still believe I do think that it's going to move up. The thing is that we had a lot of people that are on the wrong side of the trade. House and I talked about it before you came back that Friday, and we saw that the funding rates were a little bit too positive. We thought that the drawdown would be around 69K. Went lower than that, but the thing is, it found support on the 50 moving average right here, right? And on the daily, we see that we have plenty of room to the upside on the stochastic RSI. And I'm still not convinced that this is, that this bull flag, ends right here at about 72K. I think that there's a good chance we could see stable coins push up the price of Bitcoin. I don't think the volume coming in is going to be organic by any means, unless it's directly related to the ETF inflows. But I do think that there's a good chance that we could push back up into the 70, 71K range. All I'm expecting from Bitcoin, and again, I think for blow off top to get to the all-time highs is somewhere around, 75 to like 76K. That's honestly where I think I can see Bitcoin going. I think that's pretty conservative, but at the same time, that's, more bullish, given that we have OPEX next week. And also, I don't think there's anything bad necessarily to stop the markets unless that black swan event that I do expect at some point comes to fruition, but I don't think it's going to come to fruition that quickly. I think a lot of people are going to take some profit off of this June OPEX. There's no reason to really stop the market now, right? We know that there's going to be one maybe rate cuts. If they're going to probably stay restrictive, but inflation's coming down, there's no reason to really sell off, is there? That's just me thinking logically. It's kind of hard to fight the trend right now. I think a lot of people are going to get sucked in. Don't get me wrong, but I think that there is a good chance that we could see Bitcoin run up from here. What would that be? From where we currently are, about 10% or so. So not a bad return. I was going to buy it yesterday. I just didn't because I don't want to really deal with taxes and getting in and out and doing these small trades in crypto. I'm kind of just waiting for I'm the type of trader that just like, I'm willing to sit in a position for a period of time if I know that the outcome is going to be worth my time. You know what I mean? To be day trading some of this right now, you could have got caught in yesterday if you were trying to long it at 69K, and you could have seen a bit of a drawdown, close your position, and then it bounces right back, right? So I think right now it's a bit tricky. I think I know where it's going, and I think when I don't have money in the market, I'm a little bit better at calling the shots of where it's going to head. So I think that's pretty much where my logical brain would say we probably belong in terms of crypto. Anything else you want to take a look at crypto?
I'm just kind of looking. No, I don't think so. I don't think there's really been any major news. We did see Iggy Azalea with Jim Cramer this morning. So if you're a holder of her mother token, that delightful meme coin, is this a top signal or is this just mainstream attention, a positive thing? I mean, if Jim Cramer's involved, I'm hands off. But to those of you out there who, and I didn't have any of this to begin with, but to those of you who do, good luck and Godspeed.
Yeah, that's we're getting a lot of fucking top signals. I'm sorry, just in terms of like cultural.
I don't know.
Moments.
I don't think so because we're seeing. Well, I mean, for NVIDIA, yes, but for crypto, we're seeing stuff with Iggy Azalea. We're seeing stuff with douchebag Andrew Tate, and they're just like C-level. Maybe Iggy Azalea is like B-level. I don't know. I don't keep track of celebrities. But we haven't seen like the big names get back in quite yet. And once that happens, well, yeah, but he's using it from like, I'm talking about like bigger name celebrities, like pumping coins and shit. We do have Trump, saying that he wants to set up Bitcoin mining in the US and he wants to be the leader. He basically said he wants to be the only person left mining Bitcoin. I'm just like, well, I don't know about that. Other countries are also doing it, but okay. Maybe this is the top for meme coins, Kev, or maybe it's meme coin summer. That's what I'm hoping we see. The fun and shenanigans continue.
We definitely have signs of like, all right, now this is getting stupid because all the people that have no idea of how finance works or understand like monetary policy and stuff like that are definitely getting in, and it's off stupid shit like this mother token. I don't know what this damn thing does. All I know is that she had a song back in 2014 that played at my prom. So at this point, Jim Cramer getting involved with that, and Jim Cramer obviously is a great top signal, also a great bottom signal, just a great signal. A great guy. We should have a beer with him sometime. But
that's not gonna happen.
He would appreciate our show. I think he would really like my Gilbert Gottfried type impression of him. Bye. But I don't know. I don't know. I'm exhausted. Paul drained me.
Yeah. Me too. We can wrap it up right there if we would like. Shout out to our guy, Mr. House. He had surgery today on his MCL, so he is home recovering from that. Hope that goes well, buddy. All the best there. But that's going to do it for today's show. Appreciate those of you who joined us. If you have not yet, like, subscribe, comment, I guess. Any of that stuff is appreciated. Kevin's traveling for work. We'll be back probably early next week, as I don't know if House is going to want to step in while he is on the shelf after surgery. So Kevin and I will plan on doing a show on Monday. Enjoy the rest of the week. Stay safe out there, and we'll check you next time.
Take care, everyone. Later.